Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So today what I want you to understand is going to be rate lock. Why is it important? What is the point of rate locking? And the most important thing is, can a rate lock change? Can you lose the rate that you have locked in? Well, in this video, we're going to go ahead and explain all of that. So let's go ahead and start with what is a rate lock. So a rate lock is you are going to do one of two things. You are going to go ahead and lock and shop. That means that you're going to go ahead and hedge the rate that you have, which just means that if you get in contract, let's say in 30 days, in 60 days, in 90 days, whatever time frame that you go ahead and do it, and this is on a lock and shop, it means that let me move up a little bit here. This means that can you see all the dirtiness back there? Well, whatever. You could go ahead and anticipate, like, okay, we took a lot of rate hikes. Currently, right now, we're on April 2nd, 2022. If you did a lock and shop for 6 months out, which we are able to go ahead and do, you can go ahead and lock for 6 months out, you are going to be paying about a half a point increase. So that means like 0.50% increase in interest rate to go ahead and take that loan for 6 months out. But if you locked back in, let's say, January, you would have locked in at, let's say, like 3.875, and right now, as we currently sit, we're like in the high fours, depending on the loan program, your credit, and all that other good stuff. High fours, low fives. So it would have been smart to go ahead and lock and shop as you go along. So what is a rate lock? A rate lock is exactly that. It locks in the rate that you have to go ahead and either to continue the refinancing process, because if you are in the refinancing, if you are in contract to go ahead and purchase a property, then we go ahead and lock the rate, because then we have to initiate all your initial disclosures, give you everything, because as all the verbiage that I give you, that I am a mortgage broker. I actually own that company right there, Alden Mortgage and Ome Realty. So for up to 50% commission rebate on the next purchase of your home, because God knows we all need a little bit of extra money whenever we're purchasing a home. All mortgaging assistance, we got some great rate. Let me beat your big bank rate. If you have a note rate right now, let me at least try to attempt to beat that rate. And if I can't, then by all means, God bless whoever you're doing it with. But let me at least try it. And for 0% listing on selling your current home, link in the description below. But as we go along, so when you go ahead and lock your rate, it does one of two things. You get to go into contract with whatever you're doing, right? You're going to contract with your refinance, you're going into contract with your purchase, you're going to contract with whatever it is that you're doing. Now, whenever you do lock that rate, are you bound by that one person? Absolutely not. You could switch a lender as much as you'd like during the whole entire process, and I'm not supposed to tell you that. And if you do it to me, I hate you. I'll be so angry. But you are allowed to do that. It sucks. It happens. But that's the whole point of shopping around as much as you possibly can. Number two, if you want to go ahead and you lock your rate, the second part is that you are going to get what's called the loan estimate, an LE. Now that LE is going to have to go ahead and show that you have a locked rate in order for any other company out there, including myself. I will not look at your rate. I will not compete with anybody if I do not see a locked rate check mark right there. And if I see it, then I will actually go ahead and compete. Otherwise, any mortgage broker, lender, a correspondent lender, anybody who it is as far as lending goes, we could all give you a floating rate, something that's not locked. Now, what is a float? Now, a float just means that, I'm picking this rate, but it's going to go ahead and float according to wherever the market is. So it could increase, it could decrease, because you might be somebody who's very speculative, right? You might be one of those people that are like, you know what, I think that the rates might go a little bit lower, so I'm going to go ahead and float my rate. So I'm not locked into that whatever rate that it is. Let's say it's 3.5%, 4%, whatever it is, right? And I'm going to be speculative. I'm just going to go ahead and not lock this, because I feel like the rates are going to be dropping from whatever you're looking at, whether you're looking at the 10-year T-note, you're looking at the 20-year, you're looking at 30-year. I don't know. The Feds are going to buy MBSs, which they stopped. Interest rates are increasing, by the way. If you do want to keep up to date on mortgaging rates, I'll go ahead and put somewhere up here our mortgage rate updates. But yeah, that is the importance of locking your rate. Is A, it gives you the ability to go ahead and know exactly what you're priced in at. B, it also allows you to go ahead and go to any other lender, any other broker, any other person out there to go ahead and compete with each other to see if anybody else is willing to take that note rate at a lesser cost, or they're trying to compete and get your rate lower. So that is why you go ahead and lock your rate. Now the last thing is if I lock my rate, Omar, if I lock my rate, can I get unlocked? In essence, can they unlock my rate? Can they go ahead and say, no, I am not going to go ahead and keep that rate? Well, yes. Wholesalers, lenders, banks, anybody could go ahead. If the market seems too risky and we went ahead and hedged out a rate 3, 4, 5 months previously, and now we are way, way, way out of whack when it comes to rates, yes, they will go ahead and kick out the rate. They will go ahead and readjust accordingly. And then, especially like right now, I had one get kicked back at 4 to, now this is a DSCR loan, so this is what's called a non-qualified mortgage loan. This is completely different because it's an investment loan. Investment loans are usually higher, but 4% to 7.65%. We got kicked that much because everything just increased so much. The risk became too hard for the wholesaler, the bank, or whoever it is that you're selling it to, for them to go ahead and swallow. So they're going to go ahead and just dump it on over and say, you know what, we're not going to honor this lock rate. We're going to go ahead and just dump it back. You get to go ahead and choose. If you'd like it, we could go ahead and do it at this rate. And if you don't like it, by all means, please go ahead and find somebody else. So that is the biggest one. Can it change? Yes. Should it change? Absolutely. That's stupid if somebody's going to decide to change it. I mean, but does it make sense? Absolutely. Yeah, it does make sense, especially because how stupid rates have been lately and how sharply they've increased so quickly, especially since the Fed stopped buying mortgage-backed securities. Mortgage-backed securities are just a bunch of securities, which is mortgages, which is the amount that you owe against your house, versus the insuring body, versus how much they're selling it in the secondary market, and those are bonds. Bonds are just known as debt that they're buying. Yeah, they stopped buying all of that. So when one person has stopped buying millions of these debts, bonds, then yeah, it's going to increase interest rates quite dramatically, actually. So rate locks. Hopefully that helped you out. And if you did like the content, if you did like the video, please like, subscribe, comment, all that good stuff. And to keep up to date on mortgage rates, because I try to do mortgage rates at least 4 or 5 times a week, like, subscribe, comment, hit that little bell notification, and that'll keep you updated on every single one of my videos I post out, so you can keep yourself up to date to know whether or not it's a right time to buy. And plus, we also have tons of mortgage and products. I'm actually going to be doing a video for you guys to go ahead and do. We have lease to own options, 100% financing options, construction ground up, from land to construction to final completion. We do all of that stuff. So for whatever loan product you have, whether, I don't care what it is, and even do manufactured homes, which I hate doing manufactured homes, such a pain in the ass. But if you really need one, I'll be more than happy to help you in the state of California. And for 50% commission rebate, because I don't know anybody else who does that. I'm the only one who does that, as far as I know. And for 0% listing on selling your home here in California, link in the description below. Until next video, guys, I appreciate you watching. Thank you very much.